What's up, everyone? It's Scotty with MoneyVest. So hope you all are ready for the inflation week. CPI numbers are due next week, and that is going to be the most important leading indicators for the markets here, for economic activity, for the markets. Of course, we're going to track down the reaction. I'll be live during that time to cover the entire market's reaction. So hope you all are doing great and are having a great weekend. And the reason why I say it's a leading indicator, even though I know that it's a lagging indicator, because we're going to get the numbers for the month of February for inflation, is because the Federal Reserve basically bases off their their interest rate expectations on the back of where inflation is and is going to go. So that's why it is a very important leading indicator for the Fed, because interest rate policy is completely dependent on inflation. So hope you all are doing great. Again, links to our Discord and Patreon is going to be down below. Join our Patreon Discord with that 16% annual discount available until the end of this month. You get access to our 46 plus members only videos, our moneyvest.com platform that's launching very soon. And again, all the trade alerts, trade ideas also accessible for you. TradingView charts, lots of analysis, including our Discord channels with over thousands of members engaging in investing, long-term trading, long-term investing opportunities all the time. So feel free to join. And if you have any questions at all, feel free to ask or message me there. So when it comes to earnings, earnings season is still going on. And these right here are the companies that are reporting their earnings. I'm going to highlight that very, very soon. We've got, of course, Oracle reporting. So Oracle is going to be Monday after the bell. Then we've got, there's going to be a very, very few sort of large cap tech companies. So Oracle is number one. We've got Adobe, that's another very large cap tech that's reporting. And it's really going to start to now slow down of the impact these earnings are going to have on the market or the S&P or the NASDAQ, right? It's going to give us a little bit of an idea on some of the demand with respect to sort of data, cloud. We got advertising, we got e-commerce. But overall, it's going to start kind of slowing down a little bit because most of the earnings are behind us. Most of the companies have already reported their earnings. So we are coming down to kind of like the slow season when it comes to earnings here. So Oracle, very, very important after the bell. Tuesday, doesn't look like there's any companies. Manchester United is reporting their numbers before the bell, one of my favorite teams in the Premier League. Then Tuesday, again, after the bell, we don't have anything. Wednesday, pre-market, we do have Dollar Tree. We got Zim Integrated Shipping. We've talked about this stock multiple times on the channel. Petco is reporting pre-bell on Wednesday as well. Then we got UiPath, we got Sentinel-1, and that's pretty much it after the bell on Wednesday. Thursday, we got Dollar General, Dick's Sporting Goods, we got FUTU also reporting. Then pretty much that's it. And then Adobe, we got Blink, we got Ulta Beauty reporting after the bell on Thursday. I've done a couple analysis on Ulta Beauty as well. And that's pretty much going to be it. So these are the companies that I'm most interested in. And like I said, we are finally coming down, slowing down a little bit on the earnings here with respect to which companies are reporting. Now, this right here is going to be the economic calendar. So economic calendar wise, again, lots on the agenda. We got a 3-year note auction happening on Monday, March 11th. That's at 12 p.m. Eastern. New York Fed's 1-year consumer inflation expectations also coming out at 10 a.m. Eastern on the very same day. And then Tuesday, March 12th, mark this on your calendar. I will be live to cover the numbers because this right here is the CPI, the core CPI month over month, the core CPI year over year, and actual headline CPI month over month and year over year. And most importantly, the 10-year note auction also taking place on the very same day at 12 p.m. Eastern. And the previous yield awarded was just a little bit over 4%. With this right here is the forecasted CPI 3.7% year over year. That's going to be down from 3.9. That's a good sign. 0.3% increase month over month. And core inflation, that's for core inflation, by the way, that I just went over. And headline CPI expected to stay steady at 3.1% year over year and increase 0.4% month over month. But the most important number is going to be this 3.7% level, right? Are we going to see a lower print, higher print, 3.9%, same as the last print? A lot of discussions happening around that number. So I, again, will be live on Tuesday, March 12th to cover the inflation numbers. And again, we are also having daylight savings in the next, I think today or tomorrow. So we're going to have to check what that timing is going to be like for the actual numbers being released. But nonetheless, I will be live during that time to cover everything for all of you. So going over to Wednesday, March 13th. So again, PPI numbers come out a few days before or after the CPI numbers. So Wednesday, March 13th, we've got, again, crude oil inventories. We got a very important 30-year bond auction taking place at around noon. And that is going to, once again, be awarded yield of 4.36% previously. So again, we'll see where the demand sits, because the demand for these bonds is really what's going to dictate the price, which is going to dictate the yields. And again, it's a very, very important macroeconomic sort of discussion to be had around the bond market, because again, that's 3 times bigger than equities, has a much bigger role to play when it comes to the overall markets here. Now, PPI numbers are coming out on Thursday, March 14th. And again, core PPI and headline PPI, very, very important numbers. 0.2% increase month over month is expected. Retail sales also coming out on the very same day. So everything's very, very, on the same day. It's kind of falling up, and we'll be live to cover all of that. 0.5% increase expected month over month. Headline is expected at 0.3%, and Fed's balance sheets due. That comes out every Thursday after the markets close. Retail inventories, again, business inventories, and retail is control. Retail sales, again, initial jobless claims at 218,000, also expected from the economy as well. Now, finally, we've got Friday, March 15th. We got some Michigan 5-year inflation expectations, consumer sentiment, consumer expectations, including 1-year inflation expectations, industrial production. So all that super important for the markets. You can already kind of expect the markets are going to have a pretty volatile week going into next week here. Now, coming over to the technical analysis on the S&P 500 and the NASDAQ, what we have witnessed is just straight momentum to the upside. A little bit of a doji candle here on the week, considering how much indecision there was in the S&P 500 and the NASDAQ here in the previous week. So very, very much of a doji candle. So only 0.26% down on the week. So lots of consolidation sideways. And if you come over to the daily chart, we did see obviously a drop on Friday, down about 65 basis points. So 5,045 is going to be that support level to watch, all the way down to 4,800. So that, if you do see a breakdown below this, it's going to be a breakdown below this uptrending channel and this higher highs and higher lows. And that next support really is going to be down to as low as 4,800. So that is going to be that next level to watch, of course, with the support at close to 5,000 points as well on the NASDAQ. And on the S&P 500. And it wouldn't be surprising to me if we do actually end up at those levels. Talking about the NASDAQ here, so selling off also on Friday, so dropping a little bit over 1%. So resistance is going to stay put at 16,280 points. And the next most important support level is going to stay put at 15,100 to as much as 15,400 on the NASDAQ. And that's going to be a reasonable dip and / a correction of about 6 to 7% from its all-time highs, which again is quite reasonable for the NASDAQ as well. Overall, I would say the markets continue to, kind of charge higher on the back of big tech and semiconductor stocks and chip stocks more specifically. So how long is this going to last? Nobody knows, but we just have to be careful for those pullbacks and for those dips and corrections. We did get a little bit of a glimpse of that on Friday with that intraday reversal. So we did see significant reversal on the markets, with the NASDAQ, of course, dropping down from highs of well over 16,400 back down to 16,000. So that was a 2.2% intraday swing on the NASDAQ here from high to low. Same thing happened with NVIDIA, AMD on the tune of over 10%, 10 to 12%. So lots of stocks here were pushing higher, then of course reversed back lower as sellers stepped in. Some profit takers stepped in is what I will say, because they weren't sellers. They were mostly profit takers, because everybody is mostly up on these stocks and the markets in general because of how much we've already rallied. So we did see some profit takers on the day Friday, so we'll kind of wait and see what inflation numbers look like and if that's going to continue moving forward as well. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget, Tuesday, March 12th, I will be live to cover the inflation numbers at 8:30 a.m. Eastern, and that again is going to be an hour before the markets close is when the inflation numbers come out. Check out the links down below for our Discord and our Patreon. Feel free to join. As always, happy investing. I'll see you all in the next video.